Good afternoon, everybody. My name is Denise Doyle, and I am here from the Student Services and I'm joined today by Debbie McConnell and Brian McNally from the North Dublin branch of MABS, and they have come in specially to talk to us today about budgeting and give us some important advice about how to manage our finances. And I think this is a really important topic because for most students, going to college for the first time is really about making that first rite of passage into adulthood. And with that, I suppose, transition into adulthood comes more responsibility and also maybe the dreaded responsibility of having to manage your own money. And for many students, maybe you've never really had to do this before. So it can be a struggle as you figure your way through balancing a good social life with your studies and also planning for your future. So I'm going to hand you over now to Brian and Debbie, and I'm just also joined here today as well by my colleague Kate Moyne, who is guidance counsellor on the Kilbarrack campus. So I'll hand you over now to Brian.
Good afternoon. I'm just going to hand you over to Debbie. I'm going to try and share the screen here now, so hopefully this works. Okay, so can you see that? Yeah.
I can. Yeah.
Okay, so I'll just go up to the start.
Okay. Perfect. Well, welcome everybody. My name is Debbie McConnell, and Brian. This is Brian, my colleague. Both of us are money advisors in the MABS office in Coolock. I'm going to go through a little bit with you today about MABS, what we do, the process. We're going to take a look at budgeting. We're also going to take a look at the central credit register in relation to any debts that you owe, how the register works. We'll take a look as well. Some of you might be interested in maybe looking at buying a car or looking at car finance. We have questions and answers at the end. I know there is one question in already in relation to borrowing in the UK, and we'll cover that at the end. And if anybody else has any questions, we mightn't know all the answers, but we'll certainly get back to Denise and with any queries that we don't know the answer to. So just to start, just to say that MABS as a service, it's the money advice and budgeting service. We're free, confidential and non-judgmental. The service is for all kinds of people and for all kinds of debt. And by that we mean we could be dealing on one day we could be dealing with a husband and wife, another day we could have a professional person in. We deal, as I said, with all kinds of debt. So it could be anything from your mortgage, rent arrears, credit union, credit cards, car finance debt, toll debts, any sort of debts across the board is what we deal with. The reason why people fall into debt are as varied as the kind of people that call to the service and the kind of debts that we deal with. Normally people sort of are poddling along, everything's fine, and then some sort of life change happens. It could be something major, it could be something minor, maybe like a family split, a separation, one of the parties fall ill, you're paddling your own canoe and you fall ill, you've lost your job. This time of COVID, it's such an uncertain time for everybody that there's lots of people accessing the service that didn't, need to access the service before. What we try to do is we work with clients, and before I ever joined the service and before Brian joined the service, we wouldn't have known about how to prioritise things. What's the most important thing? You tend to just get your salary in and it goes out. So the most important thing that we would say is roof over your head, so that your rent or your mortgage or the money that you're paying to your parents, food on the table, your light and your heat. When you've got sort of those bedded down, that's the main things. And then after that, sort of everything falls into secondary place. What we try to do as a service, clients who would come to this service, we try and negotiate with the people that they owe money to sort of renegotiate the debts and try and come to an affordable repayment arrangement. The service will also refer clients on, or we feel that if clients need referrals, in the case of myself and Brian or any of the people at the service wouldn't be experts in social welfare. It's such a huge big area that you need to just have that as a standalone thing. So what we would do is, if we were uncertain about things that people were asking us, am I entitled to this? Can I have this as with this? We would refer clients onto the Citizens Information. Now, where we're based, the Citizens Information Office is right next door to us. People would also come that are in dire straits, that maybe they've having their electric cut off, their gas cut off. So we would have referral services to social welfare, because social welfare can help clients who are in dire distress. It's called like an exceptional needs payment. It's a need that's just come off, come up as a real exception, and the clients and the social welfare tend to help as a once off. For clients who are in dire straits, also we would work fairly closely with Vincent de Paul as well, and they can sort of help clients out as well. Now, how do you become a client of the service? Well, there's a couple of ways really. At the moment, it's mostly telephone because of COVID, but we are based in the Civic Centre, and with allowance of COVID, you can't just walk into the service, but at the moment the building's not really open. But the main things are, we have a MABS helpline, and that's open from 9 o'clock till 8 o'clock Monday to Friday. So you just ring in and you say, look, I'm having a problem, or can you talk to me about whatever? And if the service is normally there, you'll get somebody at the end of the line, or if not, there's a callback request as well. They will make contact with you at a time that suits you, or you can contact our office directly. Both the phone numbers, they're there. Now, what happens is sometimes you have people and going, I know my friend could really do with that service, but they're too afraid to make the call themselves. Under data protection, it couldn't be a case that, Brian, I was Brian's friend, and Brian would ring and say, look, my friend is in arrears with the mortgage. What you can do, because we cannot talk to a second party, but what you could do is, if you had somebody you felt needed the service, you could have them sit with you, you make the phone call, and then you say, look, my friend is here, and pass the phone call over. We also get referrals sometimes from creditors to saying, look, you contact the MABS service. If you can't afford to pay your bills, contact MABS and they'll help you, which is fine, and we absolutely will help, and that's what we're there for. But some clients come to MABS because they feel that they have to rather than they want to, and it is a full process. It's the process in which we engage as money advisors with the clients, and we have a process where we work together to try and get to the end of it. So normally what we would say is that hopefully that the clients that come to MABS come themselves rather than be sort of forced to come. So I'll just go through the next slide and just how the process works, what is involved when you contact the service, what we do, and the steps right through, and then at least it'll give you an idea that if you're ever stuck or you ever come into a case where you're going, God, I can't pay the bills, where to phone, and you actually know what steps is involved. So basically, you ring. First thing we do is we do an assessment. So it's like going to the doctor or whatever. You get all the details: name, address, marital status, how many children are in the house, what's coming in, are you on social welfare, are you working, how many hours are you working, and tell us a little bit about the debt. Why are you contacting the service? Are you in arrears with your mortgage? Is there multiple debts? Is there something in particular? You've got a debt collection letter, one credit card, multiple debts. So as I said before, we're a rights-based service. So what we would do is we will also look at, right, okay, is the client claiming everything that they can claim? If they're in receipt of social welfare, are they getting everything that they're entitled to get with social welfare? Maybe somebody's been working and then they lose their job and they go and they claim social welfare, and they don't realise that when your salary decreases, you may be entitled to get a medical card, which will help with that. If you're claiming social welfare for a certain length of time and you're living alone, there's a thing called a living alone allowance. Social welfare will never come to you and say, look, you're claiming this, but you're also entitled to claim this, this, and this. They leave the client and they leave the people to just sort of find out by accident. So we would always try and make sure that that everything that they have, or any extra money that we feel that they could comes in. The next major thing is the budget. We're not going to know how to help people. We're not going to know, what they can afford to do or can't do unless we know, the budget, how much is coming in, how much is going out, and realistically what you can afford to pay. The budget is the mainstay of our work, because from that then we were able to implement the plan and see, okay, all right, well, let's see, have we prioritised the debts, show us what we're covering and show us what's left. Then we put the plan in place. So what we would do is say, right, okay, you have X amount to pay the creditors. We'll contact the creditors, see if they'll take a reduced amount over a certain period of time. Well, hopefully then what happens is the creditors say, yes, look, we'll accept it. And then what we do is we sort of monitor the plan and say, right, we'll monitor for the next couple of months. Let's see how the payments are going. Have you set up standing orders? And then we review it and say, look, are you happy enough to sort of go yourself? And if the clients are, then what we do is we close the case. So the main thing, as I said to you, is a budget. And what is the budget? Well, if you're anything like myself and Brian and most people, you wouldn't normally do a budget. I never did before I joined MABS. My salary came in, or if when I was on social welfare, my social welfare came in one hand, out the other. Where did it go? I don't know. It just went in and it came out. So a budget is really a plan of your financial situation. And it's a fantastic thing for everybody to do, just to sit down and do their own budget. It'll show you how much money is coming into the household, how much money is going out, how much you can afford to maybe save a little, how much you can afford to spend, whatever debts you have them written down as well, and how much is going towards the debt. So in MABS have a fantastic website, but there is an interactive budget on the website at www.mabs.ie, and there's also a free budget app that you can download to any of the phones. So what you do is, you just put in your figures and it'll all calculate itself, and then you'll have a fair idea. Then hopefully with most people your budget is balanced. It's when people fall into difficulty is when the budget is in a minus situation, so that you've got more coming out than you have coming in. So as I said to you, then when we have the budget, then what we look at doing is implementing the plan. Okay, so the financial plan is basically what we do is, say for argument's sake, a client comes and they've got 3 debts. We contact the creditors and say, look, here's a copy of the financial statement. This is exactly what's happening in this client's life at the moment. They're supposed to be paying you €100 a week to repay this debt. They can't afford it. See what the budget says. The budget says they can only afford to pay 30. Now, offers are worked out on a pro rata method of distribution. That sounds like a big highfalutin thing, but basically what it means is that euro for euro, whatever's left over, each creditor is getting an equal share of the pie. So basically, if you look at, so say somebody we've done the budget and they've got €10 left with which to offer the debts. They have 2 debts in place. One is for €90. They owe somebody something, say it's for their television. They owe €90 for that, and they owe €10 for something else, for a mobile phone. Pro rata would mean that €10 is available on the plate, and that the one that's owed €90 will get €9 out of that tenner, and then the other that's owed the €10 will get €1. So it means they're getting an equal share for euro for euro. Again, as I said, what we do is we prioritise the roof over your head. So your mortgage will be prioritised before any of the secondary debts, or your rent, your utilities as well, because you need light and you need heat. If the pro rata method is accepted by the creditors, what we ask the clients to do is set up a repayment plan. So you can get a standing order in place, get a direct debit in place, and make arrangements to have it taken maybe from your social welfare payment if you can. If the creditors come back and say, no, look, that's not enough, what we say to the clients all the time, pay anyway. Something small is better than no payment at all. And what we do is we go back to the creditor. If you start making the payment, to say, look, they've made the payments, could you please accept it even for 3 months, 6 months? And then what we'll do is we'll come back and we will take a look at it again. So we also, as I said, will take a look at your income. Is your income maximized? If it like people, you might be on social welfare, you might be working part-time, you might be working full-time. So in the case of clients who were in receipt of social welfare, there's other add-ons that you can have with your main social welfare payment. It could be, as I mentioned before, living alone allowance. That's for clients who are just in a house by themselves, totally on their own, with just their own social welfare payment. What social welfare say is, it's easier to sort of cook for two people, so it takes one person. It's more it's you spend more money just buying for one, so they'll increase the social welfare by a small amount. There's also, in the winter months, you can claim help with your fuel allowance. So there's fuel allowance if you have children. There's help with the children going back to school. These are all add-ons, but again, a social welfare won't tell you. So we know the main ones. We'll take a look and see, are you getting this, are you getting that? As well, if you have social welfare, you'd normally, for most people across the board with social welfare, all people across the board, you're entitled to a medical card. So that'll save you if you have to go to the doctor. It'll save you on your medical things. You also may qualify for a travel pass. If you're working, it's as well, are you on the correct tax table? Are you getting the correct tax credits? Have you worked maybe part-time for the summer? Are you entitled to your tax back? In the case of single parents, there's an extra tax credit because you're bringing up the child by yourself. So if you're working, it's called the single person tax credit. You just contact Revenue, get them to put it on, or go to Revenue online, and it'll just mean there's extra money coming into your account, and that's available, I think, until the children are 18. In the case of clients who have a mortgage and they've fallen on hard times or they've lost their job, the government have provided it's a rent a room scheme, because there's so many people looking for the accommodation. So you can bring somebody into your house, they rent a room for you in your house, and you don't have to pay any tax on that up to 14,000. In your job, if you're stuck, is there scope for overtime? If you're, can you work a few extra hours? So again, here's the table. It's like the food table. It's the priority table, and this is what, it doesn't matter if you're a student. It doesn't matter if you're a family, whatever. This is how your priorities should be set out in any budget, right? So again, the roof over your head. The other thing is your shopping basket, is your food. The other thing is your light and your heat. Then you've got the sort of secondary items. You're going like, okay, so your hospital, if your doctors, your dentist, your glasses, your education there, as you can see, if you're entitled to, are you getting the SUSI? If there any money in your budget for a few bob for savings. If you have a car, you also have to put by your money for your car, for your tax, your NCT, your petrol. And then sort of the last, the non-essential items, but still, so save a few bob for Christmas. Have you got enough money to go on holidays? What about hairdressing? Do you smoke? Do you drink? So they're all things that you'd have in your budget. So what we'd say to clients as well, when we're doing a budget, and for yourselves and everything, if you're a student or whatever, shopping around is key. So if you're going to be setting up your own place, if you're a student and you're moving into your own place, what you're going to have your TV package. For all students and most people, they all have mobile phones, and then your utilities for your gas and your electric. So just for, just say for TV packages, you'll have it, maybe Sky doing a special offer, join us for 6 months and we give you half price, or you'll have another, Vodafone or doing this, get your telly and get whatever free. Now, the thing to remember is with your mobile phones, your utilities and your TV packages, you normally sign into a contract with them. So the contract could be anything from 12 months to 24 months. Make sure that you're out of contract before you decide to switch around for anything. If you're looking at your mobile phone deal, you're looking at your TV package. If you're still in contract, especially with the case of your mobile phones or your TV packages, what they'll do is, if you try switch mid-package, what they'll do is, if say you're 6 months into a 12-month package, they have the right to charge you for the remaining 6 months, even if you switch before that time. So it's just something to remember. So we just did a quick case study for mobile phones. So we thought everybody will have a mobile phone. And what the mobile phone dealers do is they like to keep you working with them. They like to keep you in their grasp. So what they'll do is, they'll know you're in contract, and then they'll say to you, right, okay, well, look, you're coming near to the end of your contract. You have a chance to upgrade your package. Would you like to upgrade for a phone? You can, get rid of your existing phone and upgrade. So we just did, a thing which would be normal for an upgrade of a phone. So we called him Troy and we said, look, okay, so he's with his provider, and now the provider have come back and said, okay, you're just coming out to the end of your contract, and we're going to give you a new deal. How would you like? A new iPhone? Doesn't have to be the top of the range, a new iPhone 13. How'd you like a new iPhone? We'll give it to you with all your calls included for €60 a month, and you have to sign into a 2-year contract. And people are going to go, oh yeah, that's great, I'm paying that already, so I'm getting the phone for nothing or whatever. But if you look at it the other way, what would happen is, right, you're out of contract, right? But there are other providers around there, and we're not promoting Gomo, we're not promoting anywhere. It's just, you know, a couple that we picked off the internet. Gomo at the moment are offering a package, everything in $14.99 a month. That's unlimited data, all your calls and all your texts. Or 48 are doing $10.99 for unlimited. So if you look at that over 2 years, if he was working with Gomo, it's going to cost him 360. If he was working with Gomo, it's going to cost him 360, and if he works with 48, it's 264 versus 1,440. What extra could he do with that money? Like, he could go and buy a mobile phone, like a second-hand mobile phone that it's, you know, if you like, maybe go from an 8 to a 10 or whatever number he wants to go for. But it's just to show you that, you know, if you sit down and you do the math, there is a chance that you can save an awful lot and still maybe upgrade to a different phone. So again, the next slide, we're talking about if you do decide to borrow, right? So all students are probably going to look at a student loan maybe at some time, or they're going to look at borrowing. Maybe you're looking at borrowing for maybe a car or something, whatever. But what we'd say to you is, again, shop around. There's loads of comparison websites out there. Before you put your name to anything, have a look. And the main things to look for, it's not rocket science, is the annual percentage rate. So that is, what rate are they charging you? What rate of interest are they charging you on your loans? Now, this is just a general thing. So for AIB, banks, credit unions are sort of, you know, they sort of all around the same, but they might do a couple of special offers. For the loans, normally what you'll have to do is you'll have to provide proof of your income, and you might have to provide pay slips and all that sort of thing. That's one thing that, you know, that'll happen with the bank or credit union. With the money lenders, not so much. The money lenders will just say, okay, we'll give you up to whatever amount it is. But look at the difference. The APR with the money lender is 153%. That's roughly around what it is. So if you just take a look at this, you've borrowed €1,000 for 12 months. When you're looking, the really important thing is the APR, and the second important thing is the cost of credit. How much are they charging you for giving you this loan? That's basically what the cost of credit is. So you've got your Bank of Ireland's and your credit unions will charge you. You'll pay €87.29 for 12 months to repay your €1,000, and included in that loan will be 47.48, which is they're charging you. They're making a profit on you for lending it to you. Look at the difference between the cost of credit for the money lenders. Same thing, the interest rates are really, really high on credit cards. So be really, really careful if you're offered a credit card with your student package or whatever. The deal with the credit cards is pay them off month by month, because they wouldn't be up as high as the money lenders. They're up around the 20, maybe 23, 24, but the interest rates is high for your credit card. So it's just something to bear in mind, to look at before you decide you're going to do any sort of borrowing. So the next slide now, I think I'm going to be passing you over onto Brian. He's going to talk to you about the Essential Credit Register, and we'll do the question in relation to the lending from the UK at the end. So Brian, off you go.
Thanks very much, Debs. You can hear me, yeah?
Yeah, I can hear.
Yeah, brilliant. So yeah, I'm going to speak to you today about the Central Credit Register and also a bit about car finance. So firstly, the Central Credit Register. So yeah, we get a lot of questions in, especially on our Facebook Messenger page, people asking about their credit rating and credit report. So there is some misconceptions going around about it, you know. So your credit report, your credit report, it's basically a one-stop shop. So there's a database called the Central Credit Register, and that's the only place in Ireland where you can get a copy of your credit report. Now, there used to be another body called the ICB, the Irish Credit Bureau, who used to do credit reports for people, but they have been decommissioned this year, so they're no longer in existence. So the only place where you get a credit report now is through the Central Credit Register, also known as the CCR for short. So the Central Credit Register, it's a national database that stores information on consumer loans and business loans. Yeah, it was created as part of this central bank. It was created by the Central Bank of Ireland under the Central Reporting Act of 2013. So lenders must submit details of loans for €500 or more to the CCR every month, and it includes credit cards, mortgages, credit union loans, personal loans, overdrafts, car finance loans, which are hire purchase and PCP. It also includes loans from money lenders and local authorities. No utilities, TV, internet bills, mobile phone contracts are included yet. So that's a bit of a misconception, because people seem to think that if they default on a mobile phone, that it's going to affect their credit rating, which it shouldn't. I think sometimes the companies try and mislead you into believing that. So you'll make all your payments, So it can be a little bit sneaky. So nothing to do with like your phone or your TV is included on your credit on the central credit register. So the central credit register shows monthly performance data on each loan. Yeah. So loans are included on the central credit register if the loan is for €500 or more, as we already mentioned, and the borrower lives in the state at the time of applying for the loan, or the loan agreement or application is governed by Irish law. So loans outside of Ireland, if you take a loan outside Ireland, it's not going to appear on your Irish credit report. Lenders must request a copy of your credit report when you've applied for a loan of €2,000 or more. So if you apply for a loan or €2,000 or more, a lender is legally obliged to request a copy of your credit report. And for loans under €2,000, the lender has the option of applying for a copy of your credit report, but it's not an obligation. The Central Credit Register does not give an individual credit score. So that's another misconception. People seem to think they have a credit rating or a credit score. I think in the UK you do, but in Ireland you don't. All it does is it shows monthly performance data. So it'll show if you're up to date with your monthly payments, or if a loan has been restructured, or legal action has been taken. So if an individual, so if you order a copy of your own credit report from the CCR, you will see 5 years of monthly loan performance data. So what you see is 60 months for any active loan. You see 60 months of repayments, and if the repayments have been made. However, if a lender orders a copy of your credit report, they only see the most recent 2 years of monthly payments for an active loan. Yeah, so they only see 24 months, whereas if you order a copy, you see 60 months. For a closed loan, the lender will see the final 2 years of payment information, of monthly payment information. However, this 2 years of payment history will be viewable for 5 years. So even though if a lender orders a copy of your credit report, they'll see the final 2 years of payment information, but it will be there for 5 years. So it's important to note this, because what it means is it can take up to 5 years to repair your credit report, to get a clean credit report if you've defaulted on a loan or missed a payment. What I would say, look, if you get into trouble with a loan and you miss a payment, or the loan is restructured or something like that, there is an option to write a 200-word explanation on your credit report explaining how it arose, and lenders review it when deciding to offer credit. So from speaking with the guys in the CCR, what they say is, like, lenders do consider this. They do look at your 200-word explanation, and they will consider it when making a loan decision, a credit decision, because, like, often for reason outside your control, you might get into financial difficulty. Like, common example would have been people would have, obviously due to the pandemic, would have lost their jobs through no fault of their own, and may miss payments on their loan. So in that case, it's important to put up a 200-word explanation of what happened, because it's kind of more of an act of God. It's nothing that you did that caused the missed payments, or another example would be you might get sick or something like that, So it is important to write a 200-word explanation on your credit report, and lenders will review it. Also, you can request a copy of your credit report for free at www.centralcreditregister.ie. So to get a copy, what you need is proof of ID. So that can be like your PPSN card or driver's license or passport. Proof of address. So you need to scan up a copy of like a utility bill or a credit card statement. And also you'll need your PPSN number to hand, and you can go on there and they'll send you out a copy of your credit report. And I think it is a good idea to get a copy of your credit report, because it's not unheard of for stuff to be input correctly, and if you see something that looks incorrect, then you should get on to the lender of that particular loan and ask them to amend it, And we're just going to now look at a sample credit report. So sorry, it's quite small there, so I'm just going to zoom in a little bit. So this is just a sample taken actually off the Central Credit Register website. It's just a sample. So you can see what your credit report looks like. So you can see personal details up here, the name of the person, made up fictitious person, Robert Smith, date of birth, address, previous addresses, and then you can see a summary of his outstanding loans. So you can see he's got a personal loan, a mortgage, and a credit card, and you can see the balances there, and you can see the credit status. So the credit status, if credit status says non-applicable, it means that the loan is performing. There's you know, it's up to date, and there's no like legal action being taken or any restructure events, you know. So within that's a summary, but you can actually further down what you get in the credit report is you get actual performance data for each loan. So if we look at, say, his personal loan, we can see information on it. So you can see, sorry, but you can see the amount. So it's for 10,000, and you can see the start date was 2019. The end date is due to mature in 2024. So it's for 5 years, 60 months, yeah. And you can see down further how the loan is performing month by month. So you can see the cell down here, the lowest cell, that's the first when the loan was initially dispersed back in 2019. So it was for 10,000, and obviously some interest is accrued at the end of the first month. And you can see how it goes along, that after month 3 there seems to be a missed payment. So when you see a 1 here in the number of payments past due date, it means that he's missed a payment or he hasn't made the full payment. And then you can see the next month he's missed another payment, so it goes to 2, and it goes all the way up to 8. So for 8 months he was missing payments, yeah. And you can see if there's any action taken. So over here in the credit status, you can see it's non-applicable. And then after about 7 months, the lender decided to take some sort of legal action. So maybe issued a claim notice or something like that, and went through the courts to try and get a judgment. But what's happened thereafter is there seems to be some sort of resolution, and there was a restructure. So a restructure could be, you know, they might capitalize the arrears, they might lower the interest rate, or they might extend the term. And it seems like the lender or the borrower, the client, has got back on track. So you can see the balance starts going down and down and down and down. So it seems to be performing again, the loan. So it's just important to note that you know, you don't have a credit rating, but what you do, what a lender will see, they will see monthly performance data for each loan. So it can take up to 5 years, as I already mentioned, to clean your credit report. So that's the CCR. Hopefully that's, you know, giving you a bit of an overview of it. Next we're going to talk about is car finance. So again, you know, the stage you're at in you know, I know most of you in college, so you might, you know, some of you might already have cars, but some of you may be planning on getting cars in the near future. And, you know, not many people have the outright funds to buy a car outright. So, you know, you might need to take out a loan or get car finance. So we're going to look at car finance. Before I start, just one thing I'd like to say is that if you are buying a second-hand car, I think it's always important to do a check to see if there's not existing finance on the car. Because what we're seeing is we've come across a couple of cases of people who bought a car second-hand off another person, and then only to realize that the car they bought was already on finance. So they get a phone call off the finance company saying, you know, you don't actually own the car. We still own the car. So, you know, if you want to check cars on finance, there is a website called www.motorcheck.ie, and I think it costs around a tenner. But if you're close to pulling the trigger on a second-hand car, it's probably a good idea to check it out, you know. So hire purchase I'm going to talk about. So hire purchase is the most popular form of car finance, yeah? So hire purchase, HP for short, is a form of credit available from car dealers where you lease a car for a period, usually 3 or 5 years, sometimes 4 years, and get ownership of the vehicle once the final payment is made. So what's really important there is you don't actually own the vehicle until the final payment is made. So all you're doing essentially is hiring the vehicle, yeah? So the total amount you pay is called the hire purchase price, and is made up of the cash price of the vehicle. So the cash price is you know, the price you see in the forecourt, or the price you agree with the dealer. The interest, so that the interest is just the cost of borrowing, and any fees for setting up the arrangement. So there might be an arrangement fee or a booking fee involved, you know. And I suppose from MAB's point of view, what we're concerned with is, you know, if you get into financial difficulty, what your options are, because people aren't aware sometimes what their options are. So first thing you need to know is, if you miss your payments, the hire purchase company can take back the vehicle if less than 1/3 of the hire purchase price has been paid. So if you paid less than 1/3 of the hire purchase price, they can come and take that vehicle, take it off you, yeah? if more than 1/3 has been paid, they would need to take legal action against the borrower to get the vehicle back. So if you paid more than 1/3, they need to get a court order to take the vehicle back from you. And also, just what's really important is your car cannot be repossessed from your property, no matter how much has been paid. So, even if you've paid less than 1/3, they can't repossess your car. If it's in like if you're living with your parents and it's in the driveway or in the garage, they can't come onto your property because that'd be trespassing. So that's good to know, and that's known as the 1/3 rule. And there's also a thing known as the 1/2 rule. And the 1/2 rule is, right, if you've paid less than half, you can end the hire purchase agreement by returning the car and paying the difference between what you've already paid and half the HP price. So this is known as the 1/2 rule, as I said, also known as a statutory termination. And you can always request, if you want to return the car, you can request a statutory termination. So you give the car back and you pay half the hire purchase price and you give the vehicle back. You may also be liable for any repair costs or damage. So repair costs would be like costs, say, in excess of normal wear and tear. So, it's always a good idea if you're giving the car back to perhaps, take photos of the car, or else if you know someone who's involved with cars, like a mechanic or something like that, get them to do an inspection of it, to make sure that it's in working order. Because sometimes, you do hear people saying the car finance company charged them for all these repairs that, they didn't think, existed. So that's the half rule. And then a continuity of the half rule is if you've paid, say, more than half the hire purchase price, you can also return the car, but you don't get any refund for the contributions in excess of half the hire purchase price. And you'll also have to pay any missed payments, or any missed payments, also known as arrears. So, that is also a statutory termination. So the statutory termination is essentially, you can return the car, you can request a statutory termination, pay half the hire purchase price, or if you've already paid half the purchase price, just return the car. And sometimes you have to request that because there is an alternative form of recovery, which the hire purchase companies prefer to recover the vehicle by, which is known as a voluntary surrender. So the alternative is to return the car by voluntarily surrendering it, but you'll be liable for the full amount owing after the car is sold at auction. Generally, this third method of recovery from the HP company. So what happens here is when they come out to pick up the car, they'll try and get you to sign a voluntary surrender form, and you give back the car. And then what they do is they sell the car at auction, and then the proceeds from that sale, they deduct that from the total hire purchase price along with what you've paid to date, and then you're liable for any outstanding balance. And generally they prefer to recover the car by this method because it's usually more profitable for them, So it's important to know that there is a thing called a statutory termination, and you can request it because they won't tell you about this, Also, just to let you know, hire purchase loans appear on your central credit register, so your CCR. So if you miss a payment, it can be viewable for up to 5 years. And we're just going to look at a quick case study comparing the return a car using the half rule, so the statutory termination, versus returning it by voluntarily surrendering it. So in this example, we're going to assume that the hire purchase price is 20,000, yeah? So half the hire purchase price is obviously 10,000, and the assumption is that you've paid, say, 9,000 to date. So under a statute, if you request a statutory termination, you would owe 1,000 because you've already paid half, and half the hire purchase price is 10,000. So you just have to pay the difference. So you pay 1,000, return the car, and you're not liable for any further debt. However, what they will try and do is they'll try and get you to sign a voluntary surrender form. So in this instance, how it would work out, if we assume that you sell the car at auction for 6,000, you'll still be liable for 5,000 because they were recovered 6,000 at auction from the sale. You've already paid 9,000 to date, so the two of them is 15,000 is what they recover in total so far, and they deduct that from the total hire purchase price. So you're left with €5,000 outstanding, and they will chase you for that. So what I'd say is if you do get into financial difficulty, the best option, you should always firstly ask the hire purchase company if they allow you to sell the car yourself, because obviously you can probably get more from the car if you sell it yourself than if it gets sold at auction. It may be difficult to get their permission to do this because I suppose the fear from their point of view is that it may be difficult to get the proceeds back from you if you sell the car separately yourself. If they are encouraging a voluntary surrender, what I'd say is you should ask them to agree a settlement figure in advance before signing anything. So you can ask for an indication of what the liability is expected through a voluntary surrender, and get it in writing. And then what you can do is you can compare that to the cost of exercising your right to return the car using a statutory termination, which is the half rule. And then see which one works in your favour, and make a decision based on that. I'm just going to talk briefly about PCP. So PCP is another form of car finance. It's essentially a form of hire purchase where there's usually a large sum outstanding at the end of the contract, which is usually for 3 years. Similar to hire purchase, you do not own the car until the final payment is made. The consumer typically pays a deposit up front between 10 and 30% of the cash price. The monthly payments tend to be lower than hire purchase, but usually there is a larger balance at maturity called the guaranteed minimum future value, also known as the GMFV. The car balance must be paid at maturity if you want to own the car. If you're not in a position to pay, you can return the car or extend the monthly payments by extending your PCP arrangement. As a result, it can sometimes be difficult to exit a PCP arrangement, because if you need the car and you don't have the funds available to clear the GMFV, it can be difficult to get out of, PCP, again, it's a fairly inflexible form of car finance, because for a start, generally you can't prepay. So what I mean by prepay is, say at the end of the month you got paid overtime and you want to use those funds to put some more money towards the PCP arrangement. They won't allow you. You'll only be allowed pay the amount that's stipulated in the contract, And there's also have more onerous terms and conditions with PCP, such as limits on the total mileage allowed. So if you go over the total mileage allowed that's stipulated in the contract, they will start charging you for every mile. There'll be a set rate for every mile you go over it. So, those costs can rack up. There might be terms in the contract saying who and how often you get the car service. So they might say you need to get the car serviced twice a year, even though like once a year is probably more than enough. They might say you need to get the car serviced through like the authorized dealer, when it'd probably work out a lot cheaper if you just went to your local mechanic. And there's also can be terms in relation to the type of insurance. So they might say, yeah, you need fully comprehensive insurance, when third party might do, which is a lot cheaper. PCP loans, like hire purchase loans, also appear on the Central Credit Register. So if you miss a payment, it can be viewable for up to 5 years. What I would say, just to summarize, just to finish up on PCP and hire purchase is, if you are thinking of buying a car, and you need to take out finance, which most people do, because most people don't have funds available to buy a car outright, is your best bet might be to take a loan out from the bank or credit union, just a regular loan, instead of using car finance such as HP or PCP, as you will own the vehicle from the offset. Therefore, if you get into financial difficulty, you can sell the car yourself. You can realize the full value for the car, because if it's sold at auction, there's not much transparency about, who's it sold to, how much, they get for it. And if they, because most of the time when a car is sold at auction, you see that like it seems to be sold at a discount. It seems to be a bit of a fire sale. So I would say the best bet is to, if you're getting a car, is just take out a regular loan, bank or credit union. And, that way, at least you own the car from the offset. And the cost of credit is comparable with, HP or PCP generally, and that concludes the car finance. So just to summarize, just to kind of restate what some of the things Debbie said. We've got a really good website, www.mabs.ie, and there's really good budgeting tools there. Letter templates if you want to write to your creditors, if you want to make an offer yourself, try it yourself, great letter templates there. And there's also useful blogs in relation to all the debt related issues. You can connect to us via Facebook Messenger. So when you log onto the website, a little window will pop up and you can ask a question via Facebook Messenger, and it's fully confidential, so nobody else on Facebook is going to see it. And as Debbie already mentioned, you can phone our helpline. There's the number there, 0818072000, Monday to Friday, 9 a.m. to 8 p.m, or else you can call your local office. And finally, one other thing I mentioned, there's a really good website called the www.ccpc.ie, which is the Competition and Consumer Protection Commission. There's great price comparison tools on that, consumer information and rights. And what I say is, if you're taking out a financial product, whether it's like credit card, car insurance, use the comparison sites. There's, as Debbie already mentioned, Bonkers, Switcher, ccpc.ie, and do your homework, because it will be beneficial in the long run. And if you see something that's probably too good to be true, or too good to be true, then it probably is, but just do your homework. And if you need MABS, please get in touch, and yeah, that's pretty much it then. So if there's any questions, we can either ask them, or else you can log them through the chat feature.
Thank you so much, Brian and Debbie, for that. That was really, really amazing and informative. And I really particularly like the tips about shopping around. When you see the examples there of Troy and his phone, I am Troy sometimes with ringing me up and telling me you're going to get this fantastic new phone, and just continue on, and I go, oh yeah, that's grand. So that's another decision that I don't have to make. So it's all, I suppose the message is that it's about being that bit more proactive, isn't it?
Yeah, absolutely.
Okay, and you've answered a lot. I got a couple of people there who popped into my email who said that they weren't able to come in, but there were questions actually about the first of all, the car loan, and one of the questions was just, I think Brian touched on it there, about like, is it easier to get credit for say a credit union loan or personal loan than it would be to get credit for a PCP or a HP loan, or would it be easier for to get a HP loan?
I think it's probably, in terms of it's probably similar, to be honest with you, like, because a lot of the HP companies who offer HP and PCP would actually be like banks, like AIB. AIB would have their own finance company, AIB Finance, and then like Bank of Ireland would have their own one, Bank of Ireland Finance. So in terms of the due diligence done on a customer, would probably be similar. If you went to, say, AIB, your local branch, looking for a personal loan, it'd probably be similar in terms of client assessments.
So they would do the same checking of your last 6 months bank statements and your pay slips and your credit rating.
Absolutely, yeah.
They would do all the same checks. So there's no.
Yeah.
So in that sense, then, Brian, it would seem like, from what you said there, that it would be a lot simpler and maybe a lot safer for you if you were taking out a car loan, to try and go for the credit union or the personal loan. As you say, you own the car then, and you have more control, obviously, over what happens if you do end up defaulting on the loan.
Yeah, absolutely. Most definitely, Another
thing to remember, Denise, is that normally if they're going for the PCP and they're going for the car finance, the cost of the car is going to work out an awful lot more expensive than it would if they borrowed from the credit union or if they borrowed from the bank. And the second thing to remember is that normally with those sort of loans, the cars tend to be probably newer. So you're looking at, like, people, if you're going and someone says to you, right, the car, it's €500 a week, you're going, God, that's not bad now, 500. But when you actually sit down and you work it out and you go, right, if I had to taken out my own personal loan to buy this car, how much would it have cost me? If I'd taken out the PCP, there's a huge big difference in all the extra charges. And sometimes what they do is you go in and say, all right, give us that car that you have, we put that in as a deposit, but you're not even getting the full value of your car if you try to sort of sell it privately among the car zone sites or whatever.
Yeah.
So while you have to be careful, there's no finance or anything on the other cars, you have a lot more sort of in the pool to look at from private sellers, and it's not going to cost you as much. And as Brian said, if you borrow to buy the car, it's yours from the day that you pay over. This was yours from the day you pay over. Whereas with the PCP and the other one, it's not your car. It's not your car till the last payment is made, and anything can happen.
Yeah.
So we'd sort of steer. If it was my son asking me the question, I'd say to him, you're not going near the HP and don't go near the PCP. Even if you were to get a car that's a bit older, it's your car, it's on the road, and nobody can touch it. It's yours.
Yeah.
So
and as well, like I think with a regular regular personal loan through the bank or credit union, generally it's on a variable rate, so you can prepay. So if you do have a bit of extra money at the end of the month, you can pay it down quicker, you know. Whereas you mightn't have that flexibility. Certainly not with PCP, and it depends on the HP agreement, you know.
Yeah. And I thought as well, that is a really, really important point that you made about the motorcheck.ie, because I know a lot of our students here would have had maybe money that they would have got through PUP payments and saved it up and actually gone out and maybe bought their first car, and, you know, maybe fallen into that trap of buying a car, as you say, that was actually, you know, that wasn't actually theirs at the end of the day. So I think that's really, really important point to emphasize as well. Just going back to the, you know, the arrears, where you gave us the example of Robert Smith there, where he went into went into arrears, and you saw then where he had the arrears capitalization. Would that be an example there of where somebody could write in their 200 words to explain what happened?
Exactly.
Yeah.
That would be a really good entry point, like because there's been some sort of restructure there, like the credit status has changed, so it went from non-applicable, which means the loan is performing, to, you know, some sort of action was taken by the bank. So you can see it said legal action. So exactly, you know, because it looks like it was resolved. So it perhaps in Robert Smith's case, it was, you know, something like he had lost his job, you know, because he got back on track, and you could see that the loan was coming down. So you know, in that example, that, you know, there probably was some genuine reason for missing the payments, you know.
And by putting in that genuine reason, then they can see that this was not an irresponsible borrower, but it was just somebody whose financial circumstances had genuinely changed, as you say, as a result of an act of God, or, you know.
Exactly. Like, you know, and you know, if they can, what you say in your explanation, kind of, if that reconciles with what they see in the monthly performance data, you know, then you know that obviously will better enhance your chance of getting credit, you know, because they are, like, the banks, you know, they can be, you know, they have got a little bit stricter in terms of lending, but you know, they still are willing to lend. Like, they do have a lot of money, you know, available to lend, you know, and they need to get their assets working for them. So, you know.
Okay. That comes to the kind of the question now. This is particularly a question for some of our students who are going to the UK or going up to Northern Ireland to continue on with their education. The fees over there are very expensive. The only way that they can afford it is to take out a tuition fee loan. This means that some of our students may be going over to, we have a link with Sunderland University, University of Wolverhampton, Dundee, and Edinburgh Napier University. They could end up with fees of around £9,250 sterling per year for 3 years of study. So, you know, and while they don't have to pay that now, a big worry is that, you know, when they finish their education, maybe they're back in Ireland, they have a student loan out, they're paying back the student loan company. And even though the rates are very good, and even though they only have to pay a certain proportion of the fee back after, the loan back rather, over a certain threshold, they are worried that this would affect them negatively when they go for a mortgage. I wonder, could you give any advice on that?
I suppose, look, you know, if they did get in financial difficulty, say they missed some payments, obviously, look, because it's a UK loan company, I don't think it would appear in their Irish credit report. It would affect their UK credit rating, but if they're coming back here to work here after studying in the UK, then, you know, it shouldn't have any impact on their credit report. So it shouldn't impact their ability to get a mortgage. What I would say is, like, you know, if they have repaid these loans and they made all the payments and they're coming back here to get a mortgage, it's something that I would actually encourage people to when they're doing their mortgage application with the representative in the bank, say, look, I had this student loan, I paid it back. Because if you can show that you've been making consistent payments, along with, say, when they're living in the UK, they're probably paying, accommodation, that kind of stuff. If you can show, you have a regular, consistent payment history, like that will actually work in your favor.
Okay.
When it comes to getting a mortgage, yeah.
Yeah. So it wouldn't be a disadvantage to declare that you had that student loan.
I don't think so.
Yeah.
I don't think it'd be a disadvantage, and if possibly, it may be a slight advantage, because it shows consistent, regular repayment history of a loan.
Okay. And just, I suppose, one of the final questions then, I know that some students that said to me when I was telling them about this talk was, is MABS only for people if they're in financial difficulty? If you are managing okay, but you wish to do better, you want to try to demonstrate some element of savings because you're going for maybe a mortgage, would MABS take on clients like that, just to help people look at their finances?
Yeah, Denise, we absolutely do. What we do is, like, we get clients to come to us. They just really want budgeting advice.
Yes.
So we would sit down with them and we'd do the budget. And then, as I said to you, there might be areas where when we're looking at the budget, we say, look, some people will come in and go, I've 200 euros is going on my Sky bill. And you're going, well, like, what is that for? Well, I had Sky, I had the kids here and I had put Sky, they've extra, channels in the room, but the kids are gone. And you're going, well, contact them and ask them to cut it down. Like the phone bill, 60 euros a month for the phone. We're going, well, when you have a contract, because you might be able to move here. So absolutely, we take a look. We do budgeting advice with clients all the time, even if they're not in financial difficulty. Do you know what I mean? And there's things that we would sort of look at and go, well, there's different areas. So say even like for saving on your bins, there was the Dublin City Bin Company. Now they only did the sort of the city and stuff. I think they do around Coolock and that, the red bins, and they were doing an offer for 99 euros for the first year, whereas I'm out in Swords, so it was Green Star. I couldn't avail of that offer, but like there are savings to be made when we're looking at all the stuff. Or we'd lead people like we did in the talk, say go to the comparison website, maybe move from Bord Gosh, you're paying premium there in Bord Gosh because you're out of contract, and then you've reverted back. Whereas if you move maybe to Electric Ireland, they're doing a deal, we'll give you 300 euros and your units will be at X amount for the next year. So we are for people, mainly for people in debt, but if anybody wants to come for budgeting advice, or they're looking to sort of make a few bob savings with the view they're going to save for a house or do whatever, absolutely we see clients for budgeting advice also.
Okay, that's a wonderful service, Debbie, because even if you are just kind of making ends meet and living from, but you're living from month to month, that is stressful as well. Even if you're not actually in debt, it's just knowing that you don't have any kind of leeway there, and you don't actually have any cushion if something comes up like a big dental bill, or the car breaks down, or the boiler goes, whatever. So it could be very wise maybe to get some budgeting advice before things get bad as well. Yeah, absolutely. And do you find, and I'll finish up on this question, but do you find sometimes when you're looking at people's finances and and you're saying, well, look, do you realize that you're spending 35 euros a week on coffee, and you've got all these different subscriptions and that. Do you find sometimes there's a psychological resistance to sort of giving up things, or does that ever come into your job?
100%. And what we say, I used to smoke, Denise. If you say to them, do you smoke? And they go, yeah, I do. Yeah. And, well, how many would you smoke in a week? Probably 20 a day. And you're going, right, how much is that? Like cigarettes are 16. Multiply that by your 7. You're looking going, if you actually sit and look at it, this is how much, and they go, no, I'm not spending that much on the cigarette. You're going, no, you are if you're smoking 20 a day. I'd never say to anybody, give them up. We'd never say. But some people are going, well, for some people, look, I don't go out and I don't drink and I don't go to the movies and that's my thing. And you're going, great, no, that's brilliant. That's, but there are things. Or what you'll find with probably the students, I'm finding it with my own son, is when he's in transition years, so they're allowed to leave the school now, so they can go down to, and they go, Mom, can I have a 5 for lunch, Mom, kind of, and you're going, even looking at the amount that you're spending on a
Yeah.
lunch rather than bringing a lunch in, you're going like, when you actually sit down to look at the budget, you're going, there's loads of places where people just don't see where they can save. Or for even like you're going for families, you'd have one mum whose mother and mother before that went, we go to Northside every day and we do the shopping every day, right? And you're going, okay, but you're going every day to buy. If you take a look at trying to move your thing from doing day-to-day shopping to doing it every week, you'll be amazed at how much you will save by going to the shops once a week, because the shops are trying to make their money, and by virtue of the fact that they know how our brain works, the milk and the bread's at the back of the shop, so you have to walk all the way through, and you're getting, there's a packet of biscuits there selling off again, and before you might go in for bread or milk, and you end up coming out with a basket full of stuff that you didn't really want in the first place. It's all that sort of, we're all programmed to we're all humans, we're all programmed, and you're going, if you just try and look at it a different way, or try this, try it for a week, try it for 2 weeks, and if you find it's not making a difference, go back to your old ways and see. And then some people are resistant, going, well, it's my only form of outlet, this is what I do. Great, if that's what it is, we'd never try to say to somebody, God, you shouldn't be doing this or you shouldn't be doing that, but we'd offer a thing where you're saying, look, maybe if you even cut down and try to smoke 10 a day, look how much you're going to save at the end of the month, or look how much you'll have saved for Christmas. And people will and we'd never tell people what to do, but if you sort of make a suggestion and say, give it a try, people will often come back and go, do you know what, I never actually thought about it like that, and I've tried it and it is making a difference.
Yeah, absolutely. And I really agree with you about the supermarkets and the way they're laid out. And I'm a particular victim of Lidl and Aldi, because they have all this kind of hardware, clothes, and the number of craft sets and balls of wool. They're like, I don't knit or craft, but when I see them, I think, this is something that maybe I need, and because it's presented there in front of me, and it's not a need. It's just, it's a suggestion, and if you're susceptible to suggestion, which I am, you do end up spending that money. And as you say, if it can be made like not as maybe a deprivation, but you are just readjusting how you're spending so that you can get something maybe that is really beneficial to you. Maybe the cigarettes are not so beneficial, but the money that you save for that ticket to Lanzarote, that could be your treat or whatever. It could be your aim, what you go for. Listen, I'm going to finish at that, Brian and Debbie. I've really, really enjoyed your talk and really enjoyed chatting with you. And on behalf of the students here at Coláiste and all the staff and management, I just want to say thank you so much for coming in to do this talk. And as I said, this is recorded and it will be in our student newsletter on Friday for all of our students to view. So thank you very much indeed for your time.
Thanks, Denise. What we're going to do is we'll send you on the slides, all right, the slides for today. And there's also like they sort of just want feedback to see if we can improve in any way. So I'll send you on just a feedback form. If any of the students take a look and they'd be happy enough just to send the feedback form to you, and then you can send it back to us. It'd be great.
That's perfect.
Thanks.
Thank you so much.
Thank you very much,
You're
Denise.
very welcome.
Thank you.
Take care. Bye.
Bye-bye now. Take care. Bye-bye.